We're going to feature an in-conversation or a Q&A with two very talented people that are very well seasoned in the real estate space, multifamily, construction. I won't make the introduction. I'm just here as your host of JCON to welcome you. I'm going to introduce Esther Lowenbein, who is a midget of many items, started out as a broker, investor, syndicator, funder, and involved in many parts of the real estate space, and she'll speak to that. And we have a wonderful, wonderful feature speaker, Joe Lubeck. And if you don't know who he is, you'll find out soon, but he's also been an entrepreneur for many years. I don't want to give away his age, but at least 30 years, and he's done very well, and I think you'll be fascinated by the conversation. So without any further ado, I'd like to call up Esther Lowenbein and Joe Lubeck to start the conversation.
Hi, good afternoon. It's an honor to introduce Joe Lubeck, a real estate titan whose inspiring journey began with humble roots and a relentless drive, leading the ownership of over 36,000 multifamily units. Well, that was as of last year. We're going to find out if it's updated. Thank you. Plus ventures in single-family rentals and hotels. Joe's investment shrewdness and knack for spotting value has earned him industry-wide respect. What truly defines Joe is his faith. At 40, he embraced Torah learning, making it the cornerstone of his life and leadership. Guided by honesty, integrity, and humility, he views Hashem as his ultimate business partner. A passionate philanthropist, Joe supports Jewish education, healthcare, and Israeli causes with unwavering commitment. His team doesn't just work for him, they invest with him, inspired by his vision and heart. In a world chasing profit, Joe reminds us that the true success comes from staying grounded, humble, and faithful. Please welcome Joe Lubeck.
Thank you so much, Esther, and it's a pleasure and honor to be here. And you're far too kind. You know, I give all credit. I don't know who in my world comes first, my beautiful wife who's here with us, or Hashem, but I have to give Hashem the credit because he brought me my wife as well. So it's a pleasure to be here, and it's great to see old friends, new friends, and very importantly, not only hear about your real estate ventures, but to hear about the number of philanthropic activities that so many of us in the Jewish community are involved in. And at the end of the day, that's our real goal.
100%. I got to meet your lovely wife and your son. Thanks for checking out. So we know that you're involved in, well, first update us, is that number, well, backtrack a tiny. Last year we invited Joe and he wasn't feeling well, so we did an online Zoom video, and we decided to leave some questions for this year. So thankfully Joe is here in good health for many, many more years, and we're going to ask him things that we didn't catch up last time. As of last year, you said the company was at 36,000 units. Where is it holding now?
So today, we have a number of enterprises. Again, I give all thanks to Hashem, and it sounds corny, but you know, I started from relatively modest means, and I started the company with my wife and one mentor, and bought one deal in St. Petersburg in 1996. 144 units that I was afraid to take my wife to. It was in foreclosure and everything else, but it's been a wonderful 30-year ride so far. We've round-tripped about 225 properties that we've bought and sold over the years successfully, and today the portfolio is just over 41,000 units in the multifamily space. And we own and operate all of them. We very much believe, and a lot of people ask me, well, what about property managers? And I have great respect for third-party property and people in that business. But for what we do, where we really view our alignment with our investors and our team as being one, We self-manage everything that we own, and we don't do any third-party management. So our focus is solely in alignment between what I call our three constituencies, which are our investors, our team members, and our residents.
I remember you saying one time that after 2,000 units, that's when you went to self-managing your properties. At that point, what was the pivotal moment of changing that?
Yes, well, of course, I self-managed the first property. I went from being a corporate attorney, which I was very lucky to have been, but we decided to go out on our own. I saw what the fund I was working for was making, and I said, I need to be an owner. And our first deal, my wife and I were the managers, and I went from being a corporate attorney here in New York to being the maintenance man and the rental agent and the carpenter, and my wife got the calls at 3 in the morning. And after about 2 years of that, and we were at about 2,000 units, she said, you know, it's time for someone else to get the calls at 3 in the morning. And then we started our own management company, and since then it's really been critical. And we've been very blessed to grow the company very consistently. It helps when you're making returns, and it helps when you stay disciplined and stick to what you know. But I feel that the people component is so critical, and most of our senior people have been with 10, 15, 20 years. And of course, you have to give them a good workplace environment. You want to compensate them well. You want to bonus them in alignment with the investors and with the profit that we make. But just by way of example, we had a wonderful day in 2016. We sold at that time 24,000 units to Starwood for about $2 billion. Of course, it was a great day for us, great day for the investors. But much to their frustration, we wouldn't sell them the management platform. And we still had at that time about 7,000 units. Today we're back to 40+ thousand units. And they're still a great trading partner. And I think now they realize that it was actually to their benefit not to buy the management company, even though they offered us silly money to do it, because now we're producing more product that they can buy from us, which worked out as a win-win. But we felt we had developed such a key team and such a skilled, collaborative, and cooperative and motivated team that keeping the human intelligence, keeping that resource was extremely valuable for us. And as we rebuilt the company, my partner and I kept everyone on the payroll for 2 years till we had grown again in size.
That's impressive. That's incredible. Besides for the multifamily arm, you also have Electra Capital and the hotel, the AKA brand. So tell us a bit about that.
Yeah,
how it came about.
We expanded over the years. My day job is running the multifamily. That's what I do, know, and understand. But in partnership with some investors and some partners, we actually were asked, would we be interested in investing in some other asset classes? And so we are partners in the AKA Hotel. We're the majority equity in that. We own Electra Capital, which was a mezz and pref fund that now is doing full loans on a very boutique limited basis. We also own ARC Homes for Rent, that we really view as not being competitive but collaborative with our multifamily. In the multifamily world, we have 96% 1 and 2 bedrooms. So we want to keep those good customers who are paying us, and when they have kids or get married or need a garage, not for a car but to fill with junk, we hope to be able to then transition them from our 2-bedroom apartments to our homes for rent, which are a combination of townhomes and single-family homes. So that's our homes for rent. And then in addition, we have what we call Electra Development, which is very limited in terms of the number of projects we do. But we've been focused on mall redevelopment. We completed one major mall that was known as the Artagon Mall in Orlando on International Drive. That's now been totally repurposed and also is in the process of completing 1,000 units. And we were very lucky a couple years ago when the Southland Mall in Miami-Dade went into default. We bought that. And they were in the process now of rebuilding the mall, of course, turning it from a mall into a power center. And we're building 5,000 multifamily units. They are residential units, combination of seniors, extended care, condominium, and of course, rental. So my day job is to run the multifamily. And then my partner and I have CEOs who run each of those verticals as their own business.
So you say you sold out to Starwood. What prompted you to sell? I mean, obviously it's the price, but what would prompt you to sell now or continue holding?
Well, we do turn over our inventory pretty frequently. My goal is always to grow and prune. So in every ideal year, we want to buy more than we sell. Last 2 years, as for everybody, have been relatively slow. But fortunately, the business has done well. We didn't lower rents, and our occupancy is great, and our collections are great, which I attribute a lot to customer service and quality. But the Starwood sale is actually an interesting sale. We had partnered with what I call the usual suspects for many years: Brookfield, Blackstone, iStar, C3, et cetera. And very lucky to have been backed by them in the early years. And fortunately, we were very successful over that time. And then at one point, we bought Grubb & Ellis and did a reverse merger. We were bigger than them, but they had gotten in trouble. We bought them, and we created a public REIT that was non-traded. And we were going to go and hired our consultants, and we were going to start trading on the New York Stock Exchange. And at that point, we were approached that we think you're worth more private than public. And of course, I wanted to run a public company. Big mistake. But I wanted to run a public company, and we ran a process. I actually resigned from the board so that I could partner with some big investors to buy my own company. I thought I had the best insight, so I would probably be the logical buyer. Well, Starwood outbid me, and that was a wonderful result, obviously. So we ended up selling the company, but keeping the platform, keeping the team, and grew it again from 7,000 units, and we've round-tripped now a couple of major funds. And at that time, we actually started something a little different from our background. We had always been affiliated with the big investment banks, and we said we want to start raising our own funds. So we opened a capital markets office here in Rockefeller Center, in Tel Aviv, and in Dubai. And we were actually the first Jewish/Israeli, because my partner is in Tel Aviv, we were the first Jewish-Israeli company to open an office in the Dubai Financial Center. And of course, I went over there with a little trepidation and not sure about the kippah, but it was wonderful, and we've been treated excellently and have huge investments there, or from there to us. And we've also tried to grow that international relationship to the extent we can. So we started raising funds, and we're now in our 5th fund, and hopefully that continues for a long time. And with Hashem's blessing, we were sharing earlier that at my last birthday, the rabbi said to me, Moses didn't start his hard work till he was 80. And I said, oh, so the fun is just beginning. And as I'm sure all of you know, the Rebbe said there's still work to be done, so no retirement here.
The Rebbe didn't let anyone get away. And listen, we're all here as long as we can. Our purpose in this world is to continue helping the next person. So as long as you have the means and the capabilities, and it also helps keep you young and grounded, at least for me. I love working. What opportunities are you seeing nowadays? What's your target? I know you do hotels, you're in the multifamily asset, as well as rentals. Do you have a specific target asset that you're looking at? What's your target deal, and what risks are you assessing now versus years ago?
Well, it's interesting. I've been through, I think now, what I'll call 5 cycles. Each one's been a little different. Each one has its own nuances. We were very lucky in 2007 at the beginning of the GFC, where we had just made a big sale of 5,000 units, so we were sitting on cash. My partner was sitting on cash, and at that point, we partnered in the platform, not just in individual investments. And so we were able to buy when other people were in distress. So I always like to stress. That said, and I'm somewhat counter-cyclical, but I always like the famous Baron Rothschild quote, buy when there's blood in the streets. And that has served us well. The second thing I'll say is discipline. Stick to what you know. At one point, my hobby happens to be car racing. Don't ask me why. I was always the nerd. I was the chess club guy, not the baseball player. But it turned out I'm a pretty good car racer. So a friend and I decided we'd be in the racetrack business. We're smart Jewish guys. Surely we're smarter than the grease monkeys. And no, the grease monkeys were smarter. But we've always stuck to what we knew best, which was mid-market multifamily. We don't do student, we don't do military, we don't do tax credit, we don't do rent control, we don't do affordable. I always felt, based on my experience as a lawyer with the fund I was working with, that middle market multifamily was the most consistent, didn't have the highs, didn't have the lows. So we've tried to maintain our consistency and our discipline through cycles. This cycle is one of the most unusual because it went from an extraordinary high of 5 years ago of people getting 2.5% interest and buying deals for 3.5 caps and levering up to 87% and then wondering why they're giving back the property. That simply is not sustainable. It's not the real world. Similarly, on the other side, when I started the company, we had a sign actually in our war room that said 8 is great and 7 is heaven. If we got 7% interest for 7 years, interest only, if we were lucky, we thought that was fantastic. So people ask me today, where's the opportunity? When will things return to normal? To me, normalcy is 5 and 5. If I can buy at a 5, grow NOI, improve the property, deliver better customer service, and be borrowing at a 5% interest rate, I'm a happy camper. Now, of course, we vary from that. But I think from our perspective, the best opportunity is what I call value add. We used to call it mid-market, but now it's called value add. So value add, whatever class you're in, most people think of only one thing in value add, which is, of course, critical, which is renovating property. But there's other aspects to the value add. Obviously, improve management, improve customer service, improve your capital stack. The other thing I tell people, stick to what you know, stick to where you know, and stick to low leverage. Portfolio-wide, our entire portfolio is levered, including the hotels, at about 53%. And we want to go into a deal at 60%. I was said earlier, if somebody's worried about whether you're paying 5.25 or 5.5 is going to make the difference on a deal, you shouldn't be doing the deal. It's just too tight, and things go wrong and will go wrong. The current market is very unusual. Everyone talks about it, and we're still seeing it, that there's price discovery. Obviously, there's a gap between what sellers want and what sellers will pay. And I'm today on both sides of that. And of course, as a seller, I think the brokers are great and do everything you can and run best and finals. And as a buyer, I'm like, oh, you know, I need a discount and the market's terrible. But the reality is there's a lot of opportunity still out there, and more is coming, in my opinion. We're seeing literally hundreds and hundreds of deals, but they're mostly in the Class C environment, which were the people who were the highest levered and had the least margin. And also, I encourage you to be experts in where you are. With all due respect to some of you who may have been in this business and who may hopefully are doing well, everybody from New Jersey, New York, Pennsylvania, Chicago decided to become Sunbelt experts. Well, I was a Sunbelt expert in 1996, and I've had boots on the ground in the same 15 cities. Despite everyone from Blackstone to Brookfield to Morgan Stanley asking us to expand nationwide, I picked 15 cities in 1996, not knowing whether I'd ever get there. But I said, first, I liked the Sun Belt at that time because job growth and population growth were already starting. The Mercedes plant had moved to Alabama. The Toyota plant had opened in Nashville. Mercedes moved to Atlanta. BMW opened in Spartanburg. Second, again, with all due respect to those of you who may be in unions, we're in right-to-work states, so we're not governed by the unions, which is very relevant in operations. And sometimes we use unions when they're the low bidder. I have nothing against them, but I want a level playing field. Obviously, the tax environment is better, the business-friendly climate, and of course, I happen to love the sun. People say, do you miss the Four Seasons? Say, if I want to see the Four Seasons, I'll fly up to upstate New York, visit it for a day, and go back. So we were early adopters of Florida. And as a result, though, I think we have competitive advantage. And we've been in those same 15 cities. So I encourage people, become an expert. I was talking to one gentleman earlier. He said, I'm in 4 cities, and that's where I'm going to stay. I think that's kind of smart, because you got to know whether to buy this property or that property, this street corner or that street corner. So I would encourage people, particularly, look for opportunity. Sometimes they may be a lower quality than you might like. Like today, a lot of Class C is defaulting and are available at attractive prices. But it's coming. There's going to be the Class Bs and there's going to be the Class As. But it's all about, in my view, job growth and population growth, being honest, pay your people right, charge people a fair price, and give them great service. In New York, that's hard to do today because you've got silly rent control, silly politicians, and if all the polls are right, it may get worse. So you need to pick your spots and you need to know your neighborhoods. And I think there is opportunity out there, and the cycle is going to come back. Things are going to stabilize, despite the concerns of world disarray, if you will. I feel very comfortable with the world situation, that things are going to get better. The tariff situation is already resolving itself, and fundamentally, people need a place to live. So I love multifamily. I love rentals. At the end of the day, it's all about cash flow. And last but not least, and I'm probably going on too long, but don't fall in love with your asset. When someone offers you a good price, take it. Now, that's my advice. There's billionaire families all over New York City who've held the building for 3 generations. God bless them. I wish my grandfather had done that. But I left home at 15 with $400, so I didn't have that luxury.
You had great foresight and I guess a lot of luck and Hashem's guidance that led you to the Sunbelt, because you're a pioneer in the area and in the space. I know you started out with $400, starting at humble beginnings. What's your advice to someone just starting out with a minimal amount of cash in their bank? They want to get involved in real estate. What's a piece of advice you can offer?
Well, the overarching rule, of course, is believe in Hashem. Trust that God knows where he's putting you and why. And people look at me and they think I'm, must be drinking Kool-Aid. I say, yeah, I'm drinking Kool-Aid. Oh, are you a member of that Chabad thing? Yeah, absolutely. Is it a cult? Yep, absolutely. I'm in. I bought in. But that's...
Chabad.
That said, frankly, from my view, I don't judge Jewish commitment. You can be on the left, you can be on the right, you can be in the middle, we don't care. We're all Jews, we all got to work together. And as long as we follow that. Second, again, it sounds corny, but I feel I'm living proof. My grandfather said, and he had very little to give. I grew up with my grandparents, and my grandfather said, give till it hurts, was his sort of fundamental way of saying, just give, whether it's $1, whether it's a penny, whether it's your time. If you give back, and it's not that you've got to deal with Hashem, that if you do this, he'll do that. But there's no question that I have found that the more you give, the more you get. And that's not just economically, but it's in health, it's in spirit, it's in blessings with your family, like my wife and my son and my 2 daughters and now 2 grandchildren. There's no question that if you understand, believe, and learn, and I don't know how many of the 613 I'm at, probably about 7, but the reality is...
being humble.
The reality is the more you give, the more you get. Stick to what you know and work hard. People ask me, well, what's the secret? I say, 40 hours of 70-hour weeks doesn't hurt, and or 40 years of 70-hour weeks. So work hard. As far as fundamentals, people say, well, how should I start? I don't have backers. I don't have money. I said, look, buy a quad. Buy 4 units. Live in 1, rent 3. When you get that done, buy an 8-plex. Live in 1, rent 7, keep the other one, rent them all. And slowly that multiplies. Then you go out and buy yourself a nice house up in Muncie, and then you start multiplying and buying. And if you can show a track record, you can get investors. And if you show a track record and are a true handshake guy or girl, that you're not bound by your documents and your lawyers and all that nonsense, but that if you are trustworthy and honest, and also give people the bad news before the good news, that you can grow that business. And as I said, I started with 144, which was pretty good, but it was in default. It was basically bankrupt. And we quickly were able to rehabilitate that, grow the NOI, use that to buy another one, use that to buy another one, and that's how it works. And then one investor tells another investor. And if they say he's an honest guy, that's how you do it. That's how we got in the hotel business. 3 of our big institutions called me at the end of COVID, said, do you think it's a good time to invest in hotels? I said, probably. You can pick up some really nice gateway hotels at a great price. Do you want to do it? I said, absolutely not. I don't know anything about hotels. And they said, look, we know you, we love you, we made a lot of money with you. Go hire a management firm. Go hire a CEO, like we've done with each of our verticals, and we'll put up 75% of the money. And that's how we ended up in hotels. I still really don't know that much about it. I get a lot of credit. It sounds nice we own hotels, although, frankly, stick to multifamily. Rental's much better. It's enough to turn the units once a year, let alone once a night.
That's incredible. Wow. So much to unpack over there. Also, another trait that Joe didn't share, but I'll say on his behalf, a lot of his employees that work in his company reinvest in the company, so that, number one, it's a brilliant strategy for the company itself. You have the people that are working there happy and involved and making money, and also it just says a lot about you that you retain your employees for many years and that they're reinvesting in the company. So that's probably another good tip for the investors that you can learn from Joe. Aside from that, what's another leadership skill that you've learned over the years that you can share? That's important.
Well, at the end of the day, I mean, really, the Torah gives us guidance on how to be a leader in every way, shape, and form. I mean, that's our roadmap. And of course, I'm sure all of you will agree, the more you study, it sometimes seems the less you know or the more you need to learn. But it really gives us a roadmap for how to handle our fellow men, how to handle our teammates, how to handle our employees, what we can do with properly treating other people. And it's really very fundamental at the end of the day. So that's number one. Number two is I've never been sued by a lender. I've never been sued by a partner. I've never been sued by a contractor. You know, I have had plenty of trip and falls thanks to some of our brethren who are in the personal injury business. But other than that, you know, we have a saying that a good contract can negotiate you into a good deal with a bad partner, and a bad contract is irrelevant with a good partner. So you need to know who you're working with. You need to be direct. You need to be honest. You need to be a mensch. And I found that that really works. And when you treat other people right and pay them timely and provide opportunities for their career growth, I tell people you're not here to be a maintenance man for a job. You're here for a career. And a lot of my senior people, my chief administrative officer started as a leasing person on the property. She's been with me 17 years. My chief financial officer and president has been with me 20 years. My chief investment officer started as an analyst. She's been with me 16 years. And also, I tell people, smile when you give bonuses. You know, a lot of people are like, oh, God, I can't believe she got such a big bonus. No, I'm thrilled she got the bonus. And I want people to get bonuses, and I want them to have personal growth. Try to inspire them in terms of their character. I'm trying to set an example in terms of their character. But also, I want them to get their remuneration. If the bonus is painful to me, it means I didn't set the bonus structure right, and I shouldn't complain about it. So I'm thrilled when people earn their bonuses because we've achieved corporate goals. So that's a little bit about leadership. Now, I've been described as a leadership style of iron fist, velvet glove. So we do have very high expectations among our team members. It's kind of like high jumping. You jump 14, they raise it to 14 and a half. Well, that's what I do to my team. But I view my goal, you all may remember, at least I do from when I was a kid, they had the Snap-on tool guy who would drive around to gas stations and offer people tools and sell the tools what the mechanics needed or whatever. And I view my role as the Snap-on tool guy. I visit the properties, I touch them, I feel them. I say, what do you need? Is it money? Is it marketing? Is it tech? Is it some maintenance repair? Is it an additional person? Or what do you need to be more successful to help us obtain their goals? And that's my job, is to empower them to hit what they need to hit. And last but not least, the old rule, if you give people responsibility, you have to give them authority. Let them, like our property managers, they are treated and bonused as if they are running their own small business. And let's face it, in the apartment world in particular, it's very unique. You know, you're handing somebody who maybe has a high school diploma a $50 million asset and saying, here, run it. But it's really about what they do, how they do it, and what their training is. So it's very unique. You know, if you come out of Wharton and get hired at Goldman Sachs and they're paying you $100,000 a year or $200 or whatever they pay, and they're giving you a $5 million portfolio to run. So it's a unique business, and it has to be treated accordingly.
Besides for being a respectable icon in the real estate business, Joe is admirable for his later in life Torah learning and took on and started learning aggressively and supporting all the Jewish causes and Israeli causes. I just want to really focus on that for a bit because I think it's impressive and it's something that we should all learn from and know more about.
Well, you're too kind, Esty. And I really try normally to be low-key. And the environment I grew up in, we were always taught, you know, that giving and tzedakah should be anonymous. But the Rebbe had a wonderful twist on that. And I learned that, and I now understand it better, which is give anonymously except where the utilization of your name or your contacts will encourage others to follow and do the same and to be more philanthropic and to do more tzedakah. So we have gotten involved in a number of different things, and it's really just a blessing that we have the opportunity to do it. My first requirement, although we've always been, I'd like to think, generous, was to take care of the family, take care of the kids, make sure that they have the basics. But we have followed the rule of give them enough to do something, but not enough to do nothing. And thank God I've got 3 wonderful kids, all of whom work hard, and none of them feel that they're entitled, and each are earning their own place in the world. Only one is in my business, and he actually just joined us after 8 years of working for somebody else, which we were thrilled about. So we are involved now, thank God. We've been able to increase our charitable activities through a family foundation. And we really have focused on 3 things. First and most primarily, growing the Jewish community and supporting the Jewish community, both for the needy as well as to establish, in some cases, building Chabads or Hillels. And again, I may be a Chabadnik, but we're also building Hillels. We're building anything we can to help the Jewish community fundamentally, particularly on the college campuses. And that, of course, leads me to my other big focus over the last 10 years. And 10 years ago, I was telling people we have a problem on campus, and even all my Jewish friends were saying, no, you're exaggerating, you're paranoid. I wasn't. It was all there, and it's always been there. And frankly, I know I sound a little paranoid, but the reality is it's always been there. This is not news to us. It's 3,000 years, 5,000 years. And in America, we started to feel safe and assimilationist and complacent. And we can't. We simply can't. We all see here, with a little bit of backing from the media and a little bit of stupid nonsense from our, unfortunately, the majority of misinformed college administrators and professors, that anti-Semitism was just waiting to erupt, and it was always there below the surface. And people, one of my nieces said to me, oh, but my roommates don't want to talk to me. Well, they weren't your friends. They were never your friends. They might have included you because you were assimilationists. So again, I say what my rabbi said to me. He said, wear your kippah, be strong, be proud. They may not like you more, but they will respect you more. And that's all I want. They don't need to be pro-Jewish. They don't need to be pro-Israel. Of course, I want them to. And if they were intelligent and actually read the facts, they would be. But the reality is many of them don't and don't want to. And whether it's jealousy or hate or their own lack of self-worth, I really don't care. But I do want us to be safe and respected. So we're very actively involved in that now for many years, both through Hillel, through Chabad, in particular a couple of very interesting groups, like Hillel on Campus has a program called Campus Climate Initiative, which is really designed not for the students, but for the administrators to know their obligation to the Jews under the law, for safety, for equality as a minority, and we're very active there. I say it was too late for me to volunteer for the IDF, but I can fight the war on this front. So we're very active on a number of campuses at many different levels, and I encourage all of you to do the same. And for your children, obviously you want them to go to some place that's safe, but tell them to go, be proud, affiliate with Hillel, affiliate with Chabad, do what's necessary to protect themselves, but also just be proud. You know, sometimes people walk up to me and say, oh, you're a Jew. They see the kippah. I say, oh, thank you for noticing. Would you like to talk about it? And of course they run away. They have nothing to say. You know, I get the river to the sea. Well, which river? I don't know. And of course, even if they know, they get the wrong river because they think it's the Jordan. It may be now, but if you go to the Torah, it's really the Euphrates. So, you know, we really own Syria too. It's just a question of when the mortgage runs up and we'll foreclose. But we try to stay involved in Jewish causes, but we're also involved in trying to regrow the former relationships that were so strong between the Jewish community and the black community. You know, unfortunately, that's gone sideways, not through any of our doing, but through misinformed people. And we're working actively on that and trying to empower the black community through Jewish philanthropies. And that's important. And we're also involved in medical. I've been very blessed medically to have the right doctors at the right time, and we're trying to grow medical research and things of that nature. So that's been the biggest focus of our philanthropy. And one other cause that I'll just give a little plug to, which many of you may know, called High Lifeline. And High Lifeline is one of the most incredible organizations of medical philanthropy in the world, and it's now worldwide. So I would encourage you to Google that, High Lifeline. Give $1, give $1 million, whatever it is, give your time. It's very, very valuable to helping critically ill children. And I say it's our version of Make-A-Wish. Our version of Make-A-Wish is not a trip to Disneyland. It's a trip to exactly the right oncologist who knows how to make them better. And that's the program of High Lifeline. So that's a little bit about what we do. Frankly, it's no big deal. We're blessed that we have the financial ability to do what we can. but we always get more than we give. And I can assure you, you'll find that success in life and in business.
Wow, there's so much to unpack there, and we could probably go on for a few hours. Joey's an example of an icon in the real estate world, and tzedakah and faith in Hashem, and we could learn so much from you. You're a true inspiration, and thank you for all you do. On behalf of myself, on behalf of everyone here and the Jewish nation, we really thank you, and keep it up in good health.
Well, thank
Your
you,
beautiful
Esther.
family.
Look, thank all of you for coming. We wish you, of course, all the best success in life, all the blessings, and just go out there and be a mensch.
Thank you once again to Joe Lubeck and Esther Lowenbein for not only